To the untrained eye, a raw candlestick chart looks like a random flicker of red and green. Price spikes and sudden crashes appear without warning, making the market feel like an unpredictable environment where logic doesn't apply. However, these movements are the result of high-volume institutional orders. When banks and hedge funds enter the market, they leave a technical footprint that remains visible long after the trade is executed. Smart Money Concepts, or SMC, provides the framework to identify these footprints. At its core is market structure mapping, a technique used to organize price action into a readable sequence of institutional intent. By identifying specific structural points, you can move past the surface-level noise and begin to see the underlying logic of why price moves from one zone to the next. This process shifts the focus from reacting to price spikes to anticipating where institutional flow is likely to head next. Market movement is defined by two primary phases: impulses and retracements. These represent the expansion and contraction of price as institutional orders are filled. Impulse moves are the energetic pushes in a clear direction. They cover a significant distance in a short period, signaling that a dominant side of the market has taken control. Following a strong upward impulse, the market pulls back slightly. These pivot points are swing highs and swing lows. A bullish market creates a staircase of higher highs and higher lows. A bearish trend produces lower lows and lower highs, indicating sellers are in control. Correctly identifying these swing points provides an objective view of market control, allowing you to see which side of the order flow is currently dominant. Beyond basic trends, mapping requires specific signals to confirm when a move is continuing its path or preparing to reverse. A break of structure, or BOS, serves as the confirmation that a trend is healthy. It signals that the current momentum is strong enough to exceed previous structural limits. In this uptrend, the BOS occurs when the price pushes past the horizontal level of the most recent higher high. This tells you the buyers are still active and the trend is likely to continue. When a trend loses momentum, we look for a change of character, or chalk. It appears when price breaks below the most recent higher low, violating the trend pattern. This early indicator suggests the previous trend may be ending and a reversal forming. To validate these signals, we look for a specific type of candle close. As shown here, a valid break requires the full body of the candle to close beyond the level. If only the wick passes the level, it is often a sign of a liquidity grab. Institutions frequently push price briefly past a level to trigger orders before immediately reversing, making the body close an essential filter for accuracy. Alignment across timeframes adds another layer of validation. By identifying the macro trend on a 4-hour chart first, you can then move to a 15-minute chart to find signals that align with that higher order direction. Applying these strict validation rules helps distinguish high-probability structural shifts from the minor fluctuations that occur throughout the trading day. This split-screen comparison demonstrates the mapping process in action. By overlaying structural lines and labeling swing points, the raw price data on the left is organized into a defined directional path on the right. Markets do not always trend. They often enter consolidation phases, moving sideways within a defined range. During these phases, standard structural rules often produce false signals. Mapping internal movements within a tight range is difficult because institutions are often building or exiting positions, leading to frequent fakeouts. Recognizing a consolidation phase is a signal to wait. Effective mapping includes knowing when to step back and wait for a clear breakout and a fresh BOS to confirm the next trending environment. SMC Market Structure Mapping provides a logical lens to view price action. It turns the complexities of institutional order flow into an actionable narrative that you can follow on any time frame. Put these concepts into practice by analyzing live price action and identifying the structural shifts in real time. The FXNX platform is designed for this depth of analysis, providing institutional-grade technology and spreads as low as 0.0 pips to help you execute on your structural insights. Visit FXNX today to open an account or start mapping your first charts with a risk-free demo. Stop reacting to the market and start reading its structure.